per usual, living on this channel is for educational purposes only and is not intended as financial advice. Let's get together on this special Saturday edition of what may be the beginning of a fruitful video series about Bitcoin ETFs. So we had our first 2 days of trading. We had the fee war, we had the fake news after fake news after fake news after fake news. We margin called both sides of the book on the way up, on the way down, slowly getting rid of the tourists, slowly excising the tumor that is the sell the news crowd. That's all well and good. So I want to go through the options here for people if they're interested in participating in this ecosystem, obviously, as well as the data piece, which is super important and super frustrating because it is on legacy rails. So you have to keep in mind all the data you are seeing on any given period in any given time point is delayed. It is not the entire picture. So keep that in mind. So we have, 11 ETFs to choose from here. For most people on the crypto side, crypto natives, this isn't for them. This is for people in the legacy ecosystem. This is for people with all the money. Okay, let's be honest. This is for the trillions in managed money that has been untapped for the most part in the crypto side. This is about accessibility. This is about removing friction and ease of use. What do those people look for? Those people look for history and a name. That's where BlackRock comes in. They look for fees, which are essentially zero for the foreseeable future anyway. Research from these firms is super important. Whether or not they're crypto native or non-crypto native is important. We'll see how it shakes out over time. The initial flows have favored the crypto native crowd. That will most definitely change over time. Something else to consider here is the custodian. The custodian for most of these is on Coinbase. That's important because that's where most of the action probably is going to take place. If we look at all of the options, this is just 8 of them, but they have a price, they have a BTC per share price, they have a bunch of plumbing to deal with. Most of that is going to route through Coinbase to some degree. Yes, there's OTC providers, there's authorized participants, there's a ton of stuff, right, going on in the background. We can look at the map. This bottom half of the map, this is where all the juice is made. Obviously, you've got marketing and PR and research and oracles and index providers and everything else, but this is really the heat of the meat down here. And then something else to consider is the in-cash redemption model, which so far appears as though someone is sitting on the market like a 300,000 pound gorilla, or more precisely a 600,000 BTC gorilla who's sitting on the market. So you have to keep in mind, where is the action happening? And if you're telling me that you legitimately believe we've seen fresh inflows of X million dollars net, and we still are down this percentage, I have a bridge to sell you. So keep in mind, the data is delayed. The inflows are probably old. The outflows are probably fresh, right? We'll get to that in a second. But we have remaining seed capital probably from BlackRock as far as the plus side of the equation. On the minus side of the equation, the biggest minus, just size up that minus in your head, is GBTC. And that's really the main concern, and was the main concern coming into this, just because they have 600,000 BTC. That's not shares, that's not notional, that's 600,000 BTC, which is somewhere between 28 and 35 billion notional dollars USD. Very clearly during US hours, somebody was doing something, or many somebodies were doing many somethings on Coinbase this week. Going forward, Coinbase is definitely the exchange to watch during US hours for price action. This is way more important to me than the flows, because the flows are going to be ancient history by the time we see them 2 to 3 days later, and all that stuff gets populated, right? Some of this stuff, as the BlackRock SEC documents say, T+1. Okay, some of it's going to be T+2. What does that mean? Trade date plus 2 days. So we will forever continue to see delayed data. In the long term, who cares? This is not about the long term. I'm super bullish Bitcoin. I'm super bullish ETFs. I'm super bullish flows, net inflows over time. The most important thing currently today, January 13th, January next, for the rest of the month, is going to be, what do these flows look like out of GBTC? So where can you get this information? On the crypto native side, they've already started to populate mini trackers for this information. I'll put all this in the description of the video. CoinGlass, amazing resource for many reasons. They have a Bitcoin ETF tracker. I'm sure they'll have an ETH ETF tracker. But as you can start to sort of see and put together, again, this data is delayed. It's bits and pieces. It's not exactly perfect out of the gate. It will take some time to get this data to a spot where it's usable on a near-term basis, right? Really what I want to see in here is total BTC held. I could care less about volumes personally. I know the ETF boys are saying that's a big deal. Great. I could care less about AUM in the moment. Just tell me the number of BTC, okay? Because that's the most important part about this. And back to the fees for a second. Another reason GBTC is one of the bigger problem children right now is that they, in their infinite wisdom, said, that their AUM and track record and liquidity justifies a higher fee, which is fine. That's fine. They could have dropped this to 0.9. They could have dropped it to 1.25. They dropped it to 25% to 1.5%. Okay, fine. However, that will certainly discourage inflows into that product and encourage outflows from that product, which is another massive piece of this puzzle. Yes, some of the money flowing out of Grayscale will go into other products. You don't need to let me know in the comments. I know that. Grayscale's 600,000 BTC had been locked for many years, and now it is liquid. So it will encourage people to take action. If price continues to go lower, it will encourage people to take action. That's just how people are. If price is going up, if price is flat, they will remain complacent. If price continues to go lower, we will very likely see continuous outflows. There's another piece of this outflows piece on Grayscale. We'll get to that in a second. Many bankrupt entities, 3AC, Celsius, BlockFi, Voyager, Genesis, Grayscale, DCG, all own various percentages of the trust. That information is heavily delayed by quarterly updates or trickled out when people want to tell us how much GBTC they have remaining in the estate or the trust or whatever else, right? So that will be the fastest outflows, most likely from the trusts. The problem is it's kind of impossible at this point in time to really nail down exactly what those data flows will look like. So we're kind of just at the mercy of day by day here, understanding, putting pieces together in the moment, right? Things like Coinbase. By the way, after hours Friday, clearly there was some selling volume. Yes, some of this is trading, some of this is crypto native side, but most of it is going to be, and to a greater degree, is going to be denominated in US ETF flows. CME futures are important, sure. The other ETF products globally are important, definitely. But to me, this is the single most important thing in the market to pay attention to in the very near term. Anyway, so, there's plenty of places you can try to go to find this data. Blockworks also has a table set up. Again, tell me the total BTC, please, if you're listening. If you work at CoinGlass or Blockworks, just add another column for total BTC. The block also has variations of this data, not quite updated yet. So you always have to double check. It says updated XYZ date. Just make sure that you're looking at the right date on the data. You can always go, of course, to the websites for this information. But again, this will be delayed, so keep that in mind. Yes, 617,000 BTC in the trust. Okay, that's a lot of cheese. That's a lot of cheddar, right? So this isn't doom and gloom. This is just, hey, this is where to find this information. And it's very important that you pay attention to this and that you don't get run over. There's also some TradFi websites, ETF websites that will slowly start to populate this information. As you can see, it's early days here. It's not quite populated on some of these websites. Verify is an option. Yahoo Finance is an option. ETF database is an option. We can also look at the top institutional holders of GBTC, but once again, this is delayed. So we won't know who sold until like Q2 2024 because we haven't even really gotten the Q4 2023 data yet, right? Now we know ARK sold all of their GBTC before the ETF launch. But again, it's impossible to know and nail this down in the moment. What exactly is left? Who exactly the forced sellers will be in the very nearest of terms? Now we can of course go on chain and look, and we can go to Arkham, for instance, and see that per Arkham, the Grayscale labeled wallets are currently holding X amount of BTC. We can look at the flows sorted by Bitcoin, unless I'm terrible at math, this doesn't quite add up to the outflows that we've seen so far on the GBTC side. So even that doesn't quite make sense yet to me. This is like ground zero for where you'd expect to see those flows, and it doesn't quite look real time to me just yet. And another reason why this is so important, if we dial back the clock to 2022, and we think about what Grayscale and the rest of the ecosystem did with GBTC, there's a great interview Peter McCormack did with the current CEO of Grayscale, Michael Sonnenschein, discussing all this stuff. Definitely highly recommended viewing material. But there was this daisy chain of trading and collateral and bankruptcies between all of these entities that, again, may or may not at this point be holding X% of GBTC. We don't know. I don't think someone has some master list saying, as of today's date, these entities are holding X amount of GBTC. The Gemini Genesis saga has not been cleared up yet. According to Gemini, DCG still owes them money. Genesis, by the way, owes the state of New York, I believe it is, $8 million now on a fine. So there's a lot of pressures on the business side of DCG and Genesis to pay off their mistakes. So if they were holding a significant amount of GBTC, I'd imagine they would be selling it. So we may come to find out in a week or two or a month or a quarter that this early selling initially was a mixture of all of this stuff. We just don't know in the moment, right? And we can look at the FTX estate. This was from the end of November, that the FTX estate had X amount of notional value in products. As of the opening of the ETF for GBTC, it was around $1 billion notional. And again, we won't know this until the next creditor meeting. Yeah, this is just headlines to watch for, okay? And who's potentially selling now? I can't really nail it down. I don't think anybody exactly knows what's going on. It's just the assumptions, right? Who would be the first sellers? Who would be the fourth sellers? Anybody who's still dealing with 2022 drama, and anybody, of course, who's still holding a ton of GBTC. Why would you wait until the ETF? Well, the discount, remember, on GBTC was quite wide and closed essentially to zero when the ETF launched. Okay, so we got all that behind us. We know where to find the information. Someone else you can look to, James Butterfield at CoinShares. This is his recent flows report. And again, if we truly got 1.2 billion in flows across all products and still went down 10%, whatever it was, maybe I'm just being overly dramatic here, but this doesn't quite tell me the entire picture yet. I think this will become clearer over time, but the problem child is most definitely GBTC. To me, the GBTC outflows are more important than any inflow number that we see in the very near term. That is the most important. We may find out Tuesday when the data finally gets updated that GBTC had another billion in outflows. I don't know, right? We don't see it on chain, which is why, again, it's a little bit confusing to me and concerning that there's a lot left in here, potentially, a lot more forced selling potentially to go. And it's kind of just a wait and see, right? We are a dinghy, a tiny ship in a tsunami hurricane of Grayscale outflows right now on the price side. Balchunas also, updating the Bloomberg data, saying the total flows were X. Great. The data is the data, right? I'm not going to argue against it. I'm just saying, look, it's probably delayed. We probably need to know some more information here. And what's interesting to me is even after the ETF launch, the discount's still holding at, well, not holding, but closed at 1%, which tells me again that there was some selling pressure there, obviously, on the GBTC side of things. Something else that's annoying about all this data on the price side is that the BTC per share values for all these products are different. So it's going to be very hard to compare them price-wise on a one-to-one basis. And it's going to be a mess to watch that over time. So again, keep that in mind. There's tons of caveats with all this stuff. Here's ETF.com, IBIT, right? Some of this just isn't populated yet. Another great resource for flows that appears to be updated pretty regularly here is BitcoinTreasuries.net. So they've got all the ETFs in here in BTC terms, which is really what we want to see. You can see iShares at the top there, 11,000 BTC. So as the GBTC trust shrinks, you'd certainly expect the others to grow in BTC terms. So really what we need is, a massive bar chart like the ETH outflows and inflows around the staking unlock, right? That's really what we need to sort of nail down what to expect here. But again, clearly the minor outflows from GBTC, which were fresh, should not have eclipsed logically the net inflows that we saw, unless those coins were already purchased, right, and ready to go. Yes, the seed capital was USD and probably could not participate in purchasing BTC, but just keep that in mind. So we of course have headlines: good, bad, indifferent, amazing. That's going to draw people in. We're talking non-crypto native publication headlines. We're talking, real deal TradFi headlines, and it's going to go all over the map, right? We're going to see headlines like the worst performing ETFs last week were the Bitcoin ETFs, or you were down 12% if you bought the open, or whatever, right? So keep that in mind, because that's coming for sure next week. We also have various legacy platforms, brokerages that aren't allowing you to trade this stuff yet, or will never allow you to trade, such as Vanguard, most likely. And you just have to vote with your feet. If you're on one of those platforms, vote with your money and just leave. The most retail accessible place to trade this stuff, including the futures ETFs, would be Robinhood. They've got everything listed. So if you do want access to everything, that's there. And if we just look at the spot ETFs, again, this is another like data source you can use. Still not updated yet, right? So this will improve over time, but right now we don't quite have the whole picture on a lot of these platforms. And if we compare this to the ETH deposit withdrawals around the staking unlock, similarly, we had massive unlocks early that sort of slowed down over time. That took a couple months. And then we shifted towards net inflows rather quickly. So in this case, we had fast inflows and fast outflows. On the Bitcoin ETF side, I think we're going to have slow inflows and fast outflows, at least initially from GBTC. So just based on that, it's going to be hard for price to go up in the near term. And again, you can say, well, some of that is flowing out of GBTC and into other products, into BTC Spot, whatever. Look, I get it. You don't have to let me know, but we've seen what we've seen so far. And the flows data to me has not told the whole picture. It is all about GBTC. Recently, there's been a big spike out of the ETH products from Celsius. But generally, this should be a similar expectation for the GBTC picture. The question is the duration, right? Is it going to take the rest of the quarter to get most of those outflows out? Is it going to take the whole year? The last thing we want is continuous chunky outflows. We want sticky deposits. We want people to just shift things around, ideally, and not exit. If we want price appreciation. If you don't want price appreciation, there's arguments for that. Let's get this over with next week, the week after. Quick and painless death, and be done with it. But it still took ETH, even with the flows being net positive fairly quickly. Price-wise, it still took ETH around 200 days to exceed that April 12th high. And if, again, you're being honest with yourself, I've said this before, like we want price to go down before halving. We want all this selling to happen before halving. We want the education for TradFi to happen before halving. Like just whatever, right? Price is the price. Who cares? We're not here for short term, most of us anyway. Be careful with the leverage, be careful with sizing of any positions, but price has tended to peak 1 year after halving. Halving hasn't even happened yet. Okay, so keep that in mind. We can also point to the ICO treasury withdrawals historically for ETH, right? Very similar type of deal, tracking this for 2 years, essentially, where price finally found a bottom. So really just dependent on the speed and magnitude of those GBTC outflows. Again, you could argue people are going to stay in there because of tax reasons. Okay, great. But big chunky outflows are going to be those forced sellers. All right, let's talk about BTC charts for a little bit here in the back half. So 2 things we said coming into this, right? We've never exceeded the 618 in a pre-halving situation, which we are now, 618 fib of the downtrend, which was 48.5-ish. I think there was some expectation going into this that we may see upward momentum, which initially we did, right? But so far, this has played out exactly as it has in every other pre-halving environment. It's only been week 1. Okay, so look, this could recover, but that's not a pretty looking candle. I think we can all agree on the weekly. Inverted dragonfly, shooting star, tombstone, whatever you want to call it, right? It's some variety of all that stuff. We're still above the weekly cloud. That's great. Support pivot's at 34.5. The key June is going to pull up probably to about that level. Breaking below 42 would mean we're back in the weekly cloud. I wouldn't expect an edge to edge down to 24 4, but some people might, we could potentially go that low. I think that would be the max low point, and that would be based off of capitulatory type flows from GBTC. Because remember, you've got people locked in that thing for, 8 years or something? So they're sitting in massive unrealized profits right now. But I don't expect any massive upward move anytime super soon. The cloud on the weekly is going to twist. That's great. Halvings in April. That's great. But I would be patient with anything in the near term to the upside, certainly. We've also got this pitchfork, depending on how you want to draw it, also pointing to around mid to high 30s as far as a mean reversion, midpoint level. The big thing here is not to be surprised, right? To say like, oh, we can't break 40. Of course we can. Okay. If the outflows are significant, then yeah, we will know rather quickly, again, next week, what happens with those flows. If those outflows trickle out, then no big deal, right? We can talk about net inflows for the rest of our natural lives here. But I think the expectation is some chunky outflows from GBTC to continue next week. And if things get really bearish, truly bearish, again, that's pointing back to the high 20s as far as this range on the channel, let's call it. But there's a pretty decent case that sometime around having mid to high 30s completely still on the table, just based on technicals. Another issue here on forward bullish continuation in the near term. So we were working on this mega bearish divergence. Again, you can argue with me if it's more than 14 days or 14 periods, it doesn't count as a divergence. Okay, you can trade it like that, but I'm telling you, this was a bearish divergence. And so far, it's played out like that. It's played out like a bearish divergence. We can talk about resetting at 50, whatever, right? I'm less concerned about that. Sure, we've reset the bearish divergence now. Yes, we've tapped the Kijun on the daily. The real problem here is we are losing support fractals. This is the first time we've closed below a support fractal. So this is an early warning sign to exit before the TK cross to the bearish side. And again, I've said this previously, the easiest trade here would be to let everything sell off, let everything reset or go sideways, whatever. Let momentum just go to zero or down. The easiest two trades coming up in the next weeks, months, and quarter are going to be a potential bearish move through the cloud from 40 to 34, or a bullish TK recross with price above cloud, or just the daily cloud resetting and then regaining momentum post halving. In the very near term, that ascending triangle trade, I don't have it on here, but it did hit the target at 49. The problem was you only had, like 30 minutes to get that price before it reversed, but it did hit the ascending triangle target. This may morph into a head and shoulders with a neckline somewhere around 42, but I don't see any bullish continuation setups just yet. So down is definitely the most likely scenario here, or sideways. If we open on Tuesday and crush to 34 and you tell me we still had net inflows, again, I have a bridge to sell you, because the more important thing there is going to be the outflows with GBTC. Potentially, BlackRock's seed money could save us. I think they still have a bunch left, but we'll see, right? It's just going to take some time. A lot of people making comparisons to the GLD launch, GLD ETF, where that one took a couple of years to bottom before seeing mega price appreciation. That period of time, by the way, also occurring in an inflationary cycle, which many people think we're headed back to. They don't think we're necessarily going to see the inflation cycle we saw post-COVID, but they do think potentially back to the 10s or whatever it is, depending on whichever measurement you're using for inflation. There's also seasonality, which we've talked about a bunch of times. Again, January is not really the month, typically, where things tend to happen on average. Q1 across the board, on balance, also not the time, right, where things happen on average. Q2, Q4 is our wheelhouse. That's what we like. Historically, based on seasonality, that may change with these products, obviously. Just another reason to keep that in mind, that logically it would make sense if we have massive outflows of these ETFs in January, GBTC, that those are going to be quick outflows, slow inflows, and maybe we hit some sort of net equilibrium that matters, right? Not based on the data, but that actually matters in February. And we have a little bit of a up month in February, potentially. But February is one of the better months. Historically, I think matching October on record as being mostly positive. We can also look to seasonality in the S&P historically. And I don't know exactly how far back they go, but I'm guessing it's since like the Great Depression or something. Q1 tends to be flat. February tends to be the better month. Q2, you see appreciation. And then Q4, you see appreciation. So I guess, okay, so this is past 20 years maybe. Anyway, point is, again, Q1, not super exciting. February, throughout the month, maybe we see a move based on seasonality. But the best stuff is yet to come throughout the year. Jeff says the same here, that no matter who's running for re-election, this is an election year, by the way, right? 12 straight winning years for the S&P 500 when the incumbent president was running for re-election. This is super important to pay attention to the legacy maybe a little bit more as the ETFs work their way into legacy portfolios a little bit more. We can also look at the fourth year of a new president. You know, I love how they come up with all these very specific qualifications. Again, Q1 muted, Q2 is even a little muted, and most of the gains come later in the year of the election year, right? And that would make sense post having GBTC outflows hopefully mostly done by then, right? So if we're trying to rub the crystal ball, that's what I would pay attention to. One worrying thing that I will give the doomers acknowledgement here in the near term is we have seen, I've noticed lately, I don't know why, but definitely an uptick in reported layoffs and firings or whatever you want to call this. This is just tech. I think Citigroup had 30,000, the bank, 30,000 people that they're laying off. Google, Amazon, Discord, you know, a bunch of people, Instagram, still laying people off. So if we see two things, if we see an uptick in the unemployment rate, which we haven't seen yet, and if we see the 10-2 yield curve flip positive, that is very troublesome for risk assets because that would signify recessionary conditions, right? Now, we're likely getting that eventually. The question is just to what degree, but it's definitely something to pay attention to. Thus far, we've been fine. We've been able to have our cake and eat it too, but the moment this flips positive, then that's the market signal for, okay, you know, this is truly recessionary type behaviors. Last thing I'll mention, of course, is the reverse repo, which is down to its lowest point since 2021 at around 600 billion. We are continuing to issue tons of debt. Most of that debt is being absorbed in the short term by the reverse repo. If that runs out, yields creep higher. We start to see failed auctions or yield curve control, right? That's the end game potentially, which is just another version of QE infinity. That's where we win on the Bitcoin side at the end of the day. And we may see all of this line up, right? We may see everything come to a head at the end of Q1. BTFP is closing in Q1. Reverse repo is probably being completely drained by the end of Q1. Unemployment may tick up. The yield curve might invert, right? GBTC is draining. We don't get having till Q2. So it's always interesting how the seasonality and the liquidity and the fundamentals all sort of line up. Anyways, hope that was helpful. So look, TLDR, the most important thing is GBTC outflows. I don't care about anything else right now. Literally nothing, because there is a metric boatload of GBTC sitting in that trust still. That is the gravest of grave concerns at the moment. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.